But today we have a special focus on the healthcare sector from one of the marquee private equity players, TPG Capital. Mitesh Daga, who's a partner and co-head at healthcare at TPG Capital Asia, is right here with us in the studios to discuss the sector and more. Mitesh, always a pleasure to have you on NDTV Profit. Now, my first question, of course, it's been an active year. You focus primarily on the healthcare space. In India, we have seen the valuations go up, a lot of activity, especially in the diagnostics as well as the hospital space. How has been the year for you as a portfolio person, looking at your portfolio, and how active you have been as an investor?
Well, to say the least, it's there wasn't a dull moment in the year. It's been an interesting year. We all started thinking we'll get into a year of consolidation with all the global turmoil, the wars and everything, but tariffs kept us on toes, to say the least, and there were a lot of other things, including the rupee volatility that we're seeing as of the last couple of weeks. Having said that, India has been a bright spot for us and for everything else happening in the world. We have been actively improving performances of our portfolio companies in India. Last 4 years, Nisha, we have taken 15 of our companies IPO in India. And most of them are performing very well, which we are very proud about. We've also been actively deploying in this market across sectors. So this year in healthcare, we supported our portfolio company, Manipal Hospitals, to acquire Sahyadri Hospitals and consolidate the market in West India. We also acquired a pharma packaging company called Short Poonawalla. And then invested $1 billion with the Tatas in a data center JV. And acquired a software services business called SLK Software, among some other investments that we did this year.
All right, so a lot of work here and a mix of both investments as well as the exits. And very interesting to note that so many IPOs have come up, but more IPOs in the offing as your exit as well as also monetization mechanism for the coming year then, or for 2026?
100%. We are finding public markets, public capital markets in India to now have developed significant depth and offer a viable option for private equity firms like us to exit, to help build these companies and then transition them in the hands of public market investors. So we expect to have at least another 3-4 IPOs in the coming year.
So what we see from the kind of portfolio that you have, and quite an impressive one, Mitesh, but Manipal Hospitals is in the news for an upcoming IPO, Fractal, and some of the others that could be really lining up. Now, I wanted to understand that for the coming year, in terms of investments, do you have a kitty already prepared for how much you are going to invest, and which are the areas of interest now, and from valuation point of view also makes sense as an attractive buy as trend in the coming year?
So Nisha, we don't set aside specific targets by country for investing in a particular year. We have multiple funds from which we are investing in India. This year, we invested a little more than $2 billion, probably around $2.5 billion of equity across these funds. We expect to run at that pace going forward. Sectors will be our areas where we have domain knowledge, expertise, where we can help these companies improve their performance and scale up. So that will be healthcare. Financial services is a big area of focus for us in India. Consumer sector is something we like. India is coming off scale now of an inflection point on consumption demand. And then tech and tech services. So these are the 4 areas where we are spending.
Those are the choice sectors for almost all the private equity, and all of you really compete in that space. But in healthcare, hospitals have primarily seen a large amount of interest coming in from the private equity players, and the expansion of the hospital beds and the kind of availability that is going to be there in the country is also going to improve and increase with the kind of funding that has come. What's your view on hospital space?
Significant amount of investment required to build quality bed supply in the country. No, it's not just an India story, it's an emerging market story across Asia. The fact is that the public sector cannot catch up or meet the expectations of the middle class in these countries. government doesn't have the money to spend in building the capacity that is required. Most of government's healthcare budget is getting spent in doctor salaries and operating costs.
Yes.
There is no money left to build more supply. So that's where private capital has to play a role. We expect that there's at least $200 billion of capex required in India over the next 7 to 8 years to bridge the gap for the quality bed supply that's required. So we remain very constructive on the sector, and we see a long way forward for investing in the space.
So the one trend that we saw in the last few years is that a lot of hospitals came in the public market also by way of some equity investment, and now the bigger guys in the sector have the investments, and now the consolidation is taking place in the regional and standalone hospitals. How are you seeing this trend develop, and also the bolt-on that a lot of private equities are doing and creating a larger platform?
Yeah, it's a natural evolution of an industry which until 20 years ago was a not-for-profit sector and hence was very inefficiently run. There are now hospital providers who have learned how to run the operations a lot more efficiently. And what is happening is these providers are now going and acquiring, as you call, bolt-on hospital assets and improving the performance of those companies, in turn providing better access to the larger population in India and at more affordable prices.
All right, so two important questions, and we'll take it quickly. One, the valuations in the hospital sector. People find it too rich currently.
Yes.
How do you see it as an investor? And also the constant tiff with the insurance companies. How do we find a sanity as an investor? And as a large stakeholder in hospital chains like Manipal, how do you see this problem?
So there are two myths that I would like to bust. First, around valuation. On an absolute basis, if you look at large hospital chains in India, they're trading at around 30 times EV by EBITDA multiple, which looks very rich, and it is a full valuation.
Right.
But what investors are paying for, Nisha, is the margins, the growth, and the capital efficiency, return on capital. Indian hospital chains trading at 30 times EV EBITDA, but growing at 22% year on year on an earnings basis. If you look at Southeast Asian hospital chains or even in the MENA region,
Yes.
they are trading at 10 to 12, 13 times EV by EBITDA multiple, but
Right.
growing at 7%.
Right.
So market is rewarding Indian hospital companies for the growth that's
Yes.
out there, and that's how you justify on a risk-reward metric the valuation that is there today. You will also find that better operators who are operating with higher RPOBs, which means better clinical capabilities and better ROCs, are
Yes.
trading at higher multiples than less efficient operators, even within India.
Right.
So that's on valuation. The insurance hospital TIF is a good one, and it's a good way for the industry to also evolve. Unfortunately, the perspective right now, it's always the corporate guy who gets called out, where
Yes.
if medical inflation is
Yes.
being called out, and it's a big issue,
Yes.
and the hospitals are being blamed for it.
Yes.
We need to understand the root cause for that. If you look at insurance claims, there's been almost 17-18% growth year on year in insurance claims, which is what is worrying the insurance guys and the population at large. But if you do the breakup of those claims, more than 2/3 of that is actually coming from more claim frequency, not
Right.
from a higher cost.
Right.
The cost impact over there is only about 5-6%.
Right.
And the higher claim frequency is happening because of the growing NCD burden in the country.
Yes.
We are seeing a lot more diabetes, respiratory diseases, cancer incidences.
Right.
And if you go down to the root cause of that, it is a change in lifestyle,
Right.
more processed foods, and the air quality that we are breathing, Nisha.
Oh, that's been a very big concern.
Pollution has
So-
been a big driver of NCD diseases, respiratory diseases, which is taking the people to hospitals, which is increasing the amount of insurance claims, which is increasing the burden on the insurance company.
Right.
So we have to get to the actual root cause of the problem before we start blaming the hospitals.
Yes.
If you look at the RPOP growth of hospitals, that's been around 8-9%.
Right.
But 5-6% of that has come from better case mix, doing more complex procedures.
Right.
And the actual price increase, Nisha, has been below inflation
Yes.
which is around 3%.
But COVID has definitely given a lift up to the hospital space with more awareness about better services when it comes to healthcare, and therefore the insurance sector has also grown. But thank you so much, Mitesh, for getting us all those insights, on especially the hospital sector. And of course, you will see a lot more IPO exits in the coming year, and we'll touch base with you over there.
Thank you.
Thank you.
It
Thank
was
you so much.
lovely being here with you. Thanks.
Thank you so much.